Good afternoon, everybody. Welcome to the Merlin Show. It is your Wednesday edition, hump day. Sorry for the raspy voice and the disheveled look. That's what happens when you stay in bed all day. Anyway, a much better day to our markets. I was pretty happy with the way today turned out. Of course, for a lot of my positions as well. I'm sure some of you fared awfully well today. Before we dive into the topic du jour, I wanted to share something with you. Somebody asked me where I was getting this data from with regards to the days of the week. Right? I mentioned Monday's been the worst trading day of the week. It's averaged a negative 0.72% on average since the beginning of the year. The second worst day of the week is Thursday, down 0.2%, and then Tuesday and Friday are negative 0.06%, and only one day of the week is positive. Not a good sign. But let's take a peek at it. Here it is. This is from a guy named Ryan Detrick, D-E-T-R-I-C-K. You can find him on Twitter. I'll bring up his page right here. He always posts good market commentary. But Ryan Detrick is this guy right here. So I follow him, and occasionally he posts some good stuff. And this is one of the pieces that he's been posting. And there it is right there. Look, I'm a numbers person. So if the numbers are telling me that Wednesday is the best day, I got to have a bullish outlook. Now, the question is, do we see negative stuff happening for tomorrow? And we'll probably talk about that here when we analyze the markets and kind of break down what's going on in today's market activity, the gains, the losses, and all that sort of good stuff. Good to see tech bounce, by the way. So let's dive into this topic here, which is going to be inflation data. Yesterday, we did a whole show on stagflation, which, of course, incorporates components of inflation. And most of us have a belief that we're going to see inflation rise this year because of tariffs, because of a wide variety of other things, printing more money to weaken the dollar. And lo and behold, that inflation data really wasn't that bad today. It was actually kind of shocking. So I'll bring up a few pieces of data here for you guys to look at. We'll start off with the Forex factory numbers and go from there. You can see here, this is the month-over-month chart. Now, the reason that I had more of an anticipation of it rallying up is really for the past 3 months. You can see here, we went from 0.2 to 0.3 to 0.4 to 0.5, so pretty much increasing 1/10 of a point every month. And all of a sudden this month, we came out at negative 0.2 for the month, and that puts our annual year-over-year change at a decline as well. We were right at 3%. And now we are at 2.8. The expectation was we were going to come out at 2.9. So this is even better than expected. Much better. Now, again, this is 1 point data. It doesn't mean that all of a sudden things are going to be rosy and just ripping to the upside from here. But here's the numbers. This is from Yahoo Finance, kind of looking at what the data showed. This really hasn't changed much. This is year-over-year change, by the way. So if you're looking for the reference point for this data, auto insurance still topping list at an 11.1% increase year over year. Prescription drugs are 4.6, rent 4.1. And I kind of thought that would be a little, I thought that was an interesting one to see rents only increasing 4.1%. Overall inflation, you can see kind of in yellow or gold there, that's down at 2.8%. What was dragging it down? Rental cars? Who cares? I guess I don't really use rental cars. You had appliances down 3.1%, gasoline down 3.1%. So all in all, things not looking that wonky, not that out of line at this moment in time. The piece that I thought was, at least for me, very interesting here was average or earnings. So you can see kind of the, I don't know what you call that, the terracotta color. It's all red up top, but if you look at that one, it's 4% for earnings. So earnings increased 4%. And inflation increased only 2.8%. That's a huge positive if that trend can continue, right? If we can continue to see earnings outpace the overall inflation rate, then that's going to be a great thing for our markets going forward. And I also thought it'd be interesting to show you here this is over time looking at core CPI, which strips out food and energy, which of course are the most volatile components. What's negative 4.2? Let's go back to that one. What's negative 4.2? Yeah, I know, it's kind of weird. It didn't show up on my thing. I'm not sure why negative 4.2 isn't there. So, yeah, I don't know that one, Sava. I saw that too. I was like, wait, what's negative 4.2? It's missing. Bad graphic. Here you can see the overall trend, honestly, has been great, right? I think for all of us, it's good to see this chart going down to this extent where we see consumer prices dropping and dropping and dropping. They did rally over the past couple months, but we saw a tick down again today. So fine. I guess these numbers look good. I'll be honest, it was kind of a shock to me. I did not think we were going to get those numbers. And to the questions here from the viewers, Lisa says, how much do you believe the numbers that came out today appeared to be a disconnect to me? Mike says, with the massive adoption of self-driving cars, would not auto insurance come way down? We'll get to that in a second. But yeah, I do think, I don't believe the number. Oh, it was Liz up there that said either today's CPI wasn't that bad or it's manipulated. I do think that they changed the data. Again, I've mentioned this story before. John O'Donnell and I interviewed a guy from the Bureau of Labor Statistics, and for the life of me, I cannot remember his name. And after all that happened, they took every show down. You say low volume today? My volume is spiking the same levels it normally is, so it should be good on my side here. Now, I'm hoping everybody else has decent levels, but I'm looking at good numbers on my side. So, do I trust the numbers? The answer is no, I don't. I think we have to just look around us and see what the impacts are from the actions that are happening and what that might be for us going forward. Do I see the cost at my restaurants dropping? No. Do I see cost of cars dropping? I don't buy cars, so it's not an issue for me. Oh, okay. Sorry, no. Trading volume. With so many technical difficulties I've been having here recently, I just assume it was a volume issue. So I don't necessarily believe this one. Of course, tomorrow, guys, we do have the producer price index, which is the sister to this one. That's going to happen 1 hour before markets open. And given what happened today, you kind of expect those numbers to get missed by a little bit, right? Right now, the expectations are that you're going to see PPI numbers drop from 0.4 to 0.3. This does contrast the numbers we saw last month. So let's go back up to the top here. And I will go to... Was it the 7th? It was the week before this, I believe. It was the 28th when we had the core PCE price index. We saw that number increase. And this is the one that the feds pay attention to, right? Yeah, it is. It's a cold medicine, Big F. Probably is. So this jumped up to 0.3. Again, this isn't out of line or crazy high. However, seeing the CPI and PPI numbers come out significantly lower does raise a bunch of questions. What it does, if we get the PPI number to come out lower than expected tomorrow, that means that inflation is more in check. And if we get another reading from the core PCE price index that shows that inflation is under control, then that means the Fed's going to green light and probably have more rate cuts this year, right? We've looked at the numbers and it's anticipated you're going to have about 3 rate cuts this year. I personally don't see that, but hey, you know what? I'll go with whatever the market gives me. So to me, I don't know. I don't trust those numbers that came out today with regards to inflation. So that's your first piece of the market talk here. The other piece I wanted to bring up, which I thought was interesting, had to do with the EPA. So the chairman of the EPA came out today. His name is Lee Zeldin, and he issued a video where he really was aggressive, talking about the failed policies of Biden, yada yada yada. They always point the finger at the past administration as evil and bad, and we know that under Biden, there was a lot of green initiatives and clean air initiatives, and the comments were kind of startling. It made me want to make this graphic here. So Lee Zeldin was basically saying, we're repealing almost everything. We're taking back a lot of things that the EPA has done. We'll roll back a lot of the regulations. We'll open up more industry, which is a good thing on some hands. But, I think we would all agree there is a reason for the Environmental Protection Agency to kind of keep an eye on what companies are gross polluters or might be doing harm to the greater good as opposed to just producing energy. Bottom line is, I think what this does is it opens up the doorway to what we talked about, which is weaker oil prices. Now today was a nice pop for oil. No shocker, it's kind of been bouncing off that demand zone we talked about between 65 and a quarter and 67. So I do expect to see it kind of keep hopping back and forth here. But if we continue to get talk like this from the EPA and other agencies about repealing and opening up more government land for contracts and for fracking and for drilling and oil, etc., I do expect this to drop even more. And now the question I have, and I'll ask you guys this, what impact do you think this has on companies, on energy companies, like your Chevrons, your Exxons, your Mobiles? What impact do you think we need that's going to have? Because in my mind, instantly I'm thinking, well, this is going to benefit energy companies, right? That we're going to see a nice big surge in energy company stocks. However, if you're flooding the market with more and more supply, that should ultimately drop prices, which would cut into the bottom lines of these energy companies. So I got to admit, I'm kind of torn here on which way it goes. I'm kind of, curious what you guys think there. Don't trust the integrity reports now. Consider the circumstances. Yep, exactly. Do you think Trump wants a recession to lower interest rates? I don't think he wants a recession. Look, I think there's no president out there that wants the economy to collapse and people to suffer. I do think he wants to force some of these initiatives through. I think he wants to have lower interest rates, and if he can get these inflation numbers to cook just a little bit to lower that, federal funds rate even more, great. I think that his focus with the Secretary of the Treasury, Bessent, is going to be lowering the long end of the yield curve, which I think is a harder thing to do. But who knows what the ultimate end game is for Trump and the current administration. Yeah, Les says, who wants clean air to breathe? We need the EPA green changes. I think, I'm in the camp of I think we need to protect Mother Earth. I think we need to do better with regards to protecting the environment, etc. But I'll be honest, I don't know the extent to which the EPA is chokeholding, putting a stranglehold on industries. Are they going too far with some of their initiatives and regulations? That I don't know. So it's something that in my free time, maybe this weekend, I'll look into kind of what areas I think might improve. But to me, this is big. You're dropping a lot of the EPA stuff. Oh, I'm with you, Lisa. I'm definitely save the environment. We only have one planet to live on, so why screw it up and why make it worse? However, what industries are going to benefit? That's a big question I have for everyone. Is like, where do we go, right? Where do we go from here with regards to energy? I do think you'll see pressure put on alternative energies. We were big on solar, we're big on wind, and we may see an emphasis move away from those types of energies and back towards those fossil fuels so we can get those energy prices down. Trump has said very clearly, and I'm fine with that as well, that he wants the energy prices to drop and he wants oil to drop. Okay, well, then you open up as much extraction as you can, drill baby drill, and then you also remove a lot of the rules that are causing companies to maybe not have as much production. So, it's interesting. I just watched the TV series Landman. Everybody's seen the series Landman. Very interesting. Kind of a cool show. I talked to a friend of mine who's in that oil industry as well, and he goes, yeah, lots of holes in it, but overall a pretty good show. We are certainly dependent on oil, and there's plenty of oil around. We are right now the largest producer of oil in the world, so we should be okay. I never understood why we have to rely on the Middle East for oil, etc. Well, who cares? Let them do their thing. Have your own oil. Theirs is cleaner. I know. All right, I've struck a chord because I see a lot of comments coming in. Your list says, I think energy companies that rely on the price of oil and gas will get hurt, but those companies involved in transmission, transport will benefit. Yeah, because they have more volume coming through their pipes, right? So, what's that one? There's my brain's not working here today. Not Transocean. Energy Transfer Partners. So ET pipeline company that moves oil around, this might be one of those companies that benefits from that type of belief that, okay, well, we're going to have more of it. We'll be moving more of it around. It's down to, it bought about 21% lower off its all-time high. Had a nice rally over the past couple days. But yeah, I think you're right. I think pipeline companies will probably do rather well. And I think oil companies, are they going to sell more oil? Probably not. We have a certain amount of demand, so ideally oil prices would drop if we have more extraction coming out of the ground. And I think that could, in the long run, start to hurt oil companies' profits. Now, the question will be, like I mentioned with the Middle East, like Saudi Arabia. If I'm the Saudi government, I'm like, hey, listen, anytime we get below this price, stop extracting oil, right? Stop pulling oil out of the ground because I don't want price to go below a certain number. And let's say it's, I don't know, I'm making up a number here, but let's say it's $50 a barrel. At $50 a barrel, it's these oil companies are going to go, hey, wait a minute, we're not making the profits we used to, so let's just stop production. And again, I don't know what number that is. Maybe I can get John Rowland on the program to discuss that because he's the master, not me. But I do know that there is a price for everything, that at some point it's going to be not a good thing to be pulling more oil out of the ground because it's just not worth the cost, right? If it costs you $20 to pull a barrel of oil out the ground, another $10 to get it to where it needs to go, that's a $30 cost to you. So, yep, Oliver, spinoff from Yellowstone. And by the way, that Tyler Sheridan, he's got tons of different shows. There's a Tulsa King, there's Landman, Yellowstone, which I like, all those ones. It's always the same kind of drama, but it's entertaining TV. It's good stuff. All right, what else we have here? Now, when Bloomberg Radio said that President of the United States wants Saudi Arabia to increase production because he doesn't want to do business with Venezuela. It wouldn't surprise me. I mean, we're going to increase production. So, like I say, where are those numbers drawn where we can no longer need to worry about Venezuelan or, I mean, honestly, with the tariffs, we don't have to worry about Canadian, Venezuelan, Saudi Arabian oil. Why can't we be completely self-sufficient, right? Why can't we put that infrastructure in place? EPA and national level regulations and generally not specific towards issues specific to your area. You know, interesting that was one of the comments that Lee Zeldin made, was talking about power back to the states. States, you can do what you want to do with regards to your energy. You want to drill. You want to do, which I think the states should be allowed to do what they want to do, but there should be a bare minimum of guidelines that they have to adhere to just as a greater good of the United States, right? From a pollution perspective, from an environmental perspective. I certainly am in that camp as well. Energy transfer, Kinder Morgan. Yep. The Climate Accord Act, Al Gore, you filter. I didn't see that one. I hope they do a season 2 as well. Landman was pretty good. I was surprised the way it ended. I was like, man, I kept clicking for the next episode. It wasn't there. OPEC has less influence on oil prices due to U.S. production. Correct. And it's been diminishing over the years, right? We have certainly increased more and more production. And that I think could change things here in the near future, because we're going to be producing more and more and more. Drill, baby, drill. So that was your top point number 2 here, was the EPA. The next one, which this was actually a question from somebody saying, am I concerned that the Jay-Z, I got a new one here, Jay-Z Film Production. What happens when the feds lower the interest rate changes? I heard something that it could be bad first before the market then goes up. So, we talked about this one a lot yesterday, Jay-Z, and on this program regularly, so I can tell you're new to the show. So welcome to the show. Hit subscribe. If we cut rates, generally that's going to have a lag effect. So normally when they make a rate adjustment, right now, let's say we drop 25 basis points. Just hypothetical, next meeting, next week. I'll even bring it up here so you guys can see it. Let's say next week, hypothetically, we get a rate cut. Let's go to my calendar here, get the right month, and go to the 19th. Right here we have on Wednesday, March 19th, 11 a.m. Pacific time, we get a rate cut. So right now the expectations are we're going to stay at 4.5%. It's been falling, and I do think 4.5% is the right choice. Now, let's say that they do cut by 25 basis points, and it drops to 4.25. The market will surge right away. The market's going to just have this relief pop rally. It's going to be a nice surge to the upside. Typically, okay, I can't guarantee anything, obviously. I don't know 100% what's going to happen. But usually what happens is you get that reaction that the markets are jubilant, that we have cheaper money, and what happens, in my opinion, is the market prices in the impact of that rate cut on an economic level within a day or two. And then you have the next 6 to 9 months till it actually does impact the data. Because remember, if they drop 25 basis points, businesses don't change in the snap of a finger. Earnings don't change in the snap of a finger, right? Over time, you will see the impact of that lower Fed funds rate trickle through to the economy. But it's just that. It's a trickle, not an instant light switch that turns on the market. So yes, I think what you'll have is you'll have a surge right away, depending on how priced in it is. You have a surge up in the market, maybe a couple days, and then it'll probably start to slowly drift back down because they're trying to juice the economy. In the eyes of the market, sometimes that's viewed as a bad thing because why do you need to juice it? Why do we need to get in there and pump that market up? Because the market's not looking so good going forward. And that kind of has this ebb and flow between optimism and pessimism in the financial market. So there you go, Jay-Z. Hope I answered that one. Now, the question that came through was about the antitrust case on Microsoft. And it really wasn't about the case itself. It says, does it concern you, and should you be worried if you are a Microsoft shareholder? So let's go to MSFT here. And just look what's gone on with Microsoft over the past couple of months. Okay, so this pretty much follows what's gone on with the market overall. Let's go look at the peak to trough decline here for Microsoft over the past couple of weeks. In 169 days, Microsoft's down 19%. Right, that's off its all-time high. In a shorter span, we can look at back here going into December of last year, it's down about 17%. Now, Microsoft, obviously, juggernaut. Major component of the S&P, the NASDAQ, the Dow. It's in all those bad boys. Do I think an antitrust lawsuit will cause problems for Microsoft? The answer is yes. Obviously, they're going to be fighting expensive legal costs. And I assure you that Microsoft lawyers aren't, 1-800-CALL-A-LAWYER.com. It's the most expensive, best lawyers you can get out there. So, guten Abend, Chris. Servus. If we continue to get legal pressure. And the FTC, depending on what they want to break up and how they're going to, what actions are going to be taken, it could have a pretty significant impact on Microsoft. Am I worried about it? I'll be honest, I'm not. I think there's a lot of business that's going to come out of Microsoft's activities. These are things that do not impact right away, right? These take months and months, if not years, to come to fruition. Now, the announcements today were more like a renewed effort on the part of the regulatory bodies to, push this antitrust thing. I'm not that concerned. More importantly would be what's going on with Microsoft, all right? So let's take a look at this side by side with the NASDAQ. And I'm going to put on an overlay here of the triple Q so we can see the NASDAQ 100. Okay. All right. So here you have Microsoft in the candlesticks, and the solid line is the NASDAQ 100. Excuse me. And you can see they're pretty much lockstep, right? They look like they're following each other fairly closely. So at this point, I wouldn't say that Microsoft is leading the sell-off in the technology sector, but they certainly are a big piece of it. So where do I expect this to go? Well, I wouldn't be buying Microsoft right now. Microsoft would not be a buy point for me at this level just because the trend is your friend until the bend at the end. And by the way, for those of you who know Scott McCormick, one of my favorite instructors and traders, just such a great guy. He's got a new article coming out in April, so watch out for that Trading Academy newsletter where he's going to talk about his perspective on Dow theory and supply and demand and trends, etc. So let me just get this scrolled over here. So I'm looking at the next stopping point for Microsoft right around 366 to 368. All right, it's a pretty small little range. I'll make it a little bit bigger here because that's how it should look. There you go. And if I'm interested in Microsoft, I'm not worried about the antitrust issues or whatever. It's about price for me. And in this case, I'm looking at that level that I've got drawn on your screen, which goes way back. I mean, I'm trying to draw this out and I can't stretch it. There we go. So I'd be looking at selling puts down around that 382, 383 mark. Or sorry, excuse me, 368 mark would be where I'd be interested in buying Microsoft. I wouldn't touch it until then. And of course, after that, I'd simply set a stop loss on this bad boy, depending on what my objectives are for Microsoft, would be down around 362. Because after that, you've got some good measure to fall down to around, looks like about 325 to 330. So not the best if it breaks that. But I'm a big fan of the trend is your friend till the bend at the end. And right now, Microsoft clearly making lower lows, lower highs. So I have to have a bias to the downside here. And I do think you'll see it stall out right around 368. So if I'm selling the 368 puts on this one, collecting premium for the next couple of months, and it gets down there, great. If it doesn't, oh well, I don't miss it. But no, to answer the question, I am not that concerned so much about the Microsoft antitrust piece. You've got Microsoft antitrust. You've got issues with Google saying spin off Chrome. I'd be a little bit more concerned with the Google one, just because it's such a major component. I'd like to see the details of how it's going to split. But Google also technically is at a very different level than Microsoft. Right? Google is actually right at demand now. After that, you're looking down around that 149, 150 mark on Google. So nope, not concerned about this antitrust coming their way. Again, it all really depends on the extent of it and how bad it gets, how contentious it gets. Is there a settlement along the way? Remember, Microsoft's got I think, was it $79 or $89 billion in cash? If I'm Microsoft, maybe you can just pay off a fine here, settle this, and make it all go away. Can we get Scott on the program? Scott doesn't like coming on the program. He's such a great guy, but he doesn't like to come on the program. He's not a camera person. And I'm like, you just use your microphone. You don't even use your camera. So I will try to get him on. I'm going to try to bring him on once a month, maybe once every 2 months. But he was on in January forecasting where he thought the market's going to go. So it's been 2 months. Maybe we'll get him on after we release his article and see what you guys think of his article as well. Okay, so now something a little bit different. I'll go through the markets here in just a minute, but I hope this gentleman's watching today. I joined the Gary and Shannon show on KFI Radio, which is a big radio program out here on the West Coast. I don't know if I think it is nationally syndicated. They do a great job, and it's kind of funny. Gary and I actually went to high school together. Great guy, and I'm just so happy to see him so successful and doing what he does, because he's very, very good at being a radio show host. And I reached out to him the other day and told him what I did. He said, "Hey, come on the show." So I went on his show, and A couple people reached out to me asking me specific questions. Now, let me preface this by saying very clearly, I am not a financial advisor. I can't give financial advice. It's not what I do. I'm not here to give you financial advice. I'm here to talk about what I see in the markets on a daily basis. I'm here to show you, explain my trades to you. And, if you decide to take trades, that's on you. However, I can position something from the perspective of what would I do if I was in this situation. So this is not financial advice. This is how I would approach something. And here's the question for Todd G. And thanks, Todd G, for the question. I hope you're here. If you are, say hi in the chat. We'd love to hear from you. Todd G says, I want to ask your opinion on where to invest for my 4 children. They range in age from 12 to 5, and I'd like to invest a total of about $10K. So my plan was to invest more for the older children than the younger since I'm starting late for them. The goal is to get them a nest egg for the future, whether it's from a down payment or home or something similar. So he's asking, what would I do here? So first off, I don't have children, so this makes it academic for me. But if I did have children, I'll tell you what I would do day one. The day that child was born, here's what I would start to do immediately. I would buy $100 a month worth of Bitcoin until that kid reached 21 or 18. $100 a month worth of Bitcoin. It's insignificant to you. You won't even notice that $100 is gone, but I would just like clockwork. And you actually go to something like Coinbase, you can set it up to automatically buy you $100 on a specific day, once a week, once a month, whatever. And I would do that for the next 18 years. That would be my approach because it's very aggressive. But you have a very specific case. You've got 4 children. You have 12 to 5. And you also have, I didn't put the graphic on here. I had a really cool graphic for this one today. What I would do is I would probably start with something simple, like asking the question of what's your interest in working this? Meaning, how much effort do you want to give to this? How much are you going to put into it? If you want to do it as like a set and forget thing where you just make a one-time transaction and leave it alone, for me, I would just I would take a spreadsheet and calculate their age and divide that $10,000 up proportionally by how much time they have left to 18. So yes, you're right. I would give more to the 12-year-old, less to the 5-year-old because they have the benefit of time. Whatever that percentage is, that allocation, I would also say in that division of assets, I would have a portion of that in Bitcoin. And I know I sound crazy here, but I would certainly have a portion of it in Bitcoin. Now, to Chase's point, hopefully in a 529 plan, yes, this is where you have to talk to a financial advisor and figure out which plan might be best for you. If you're just going to do a standard, financial account without going 529 or some child investment account, I would make it easy on yourself and simply go, here is SPY. I would buy one position and I'd buy SPY. That way I don't have to worry about single stock drawdown. You might think NVIDIA is going to be the greatest company in the world for the next decade, but things happen, right? And if that account drops 50% or NVIDIA goes out of business, which I don't think it will, you won't be subject to that kind of pain. So I would say as an investment vehicle, the thing to buy, I would buy SPY just to have a set and forget, no-brainer. Now, you sound like you have a lump sum here of 10K to divide up. All right, so now you have your initial allocations, and let's say it ends up being that the eldest here is going to get $4,000 of the 10 because he's older, right? So I would go, let's say 4,000, and I would put 3,000 of that in SPY. I'd put 1,000 of it in Bitcoin, and I would just let that sit. Make sure they have the private keys, as the chat here mentioned. But SPY is the broadest measure of market that you're going to get without going to the Wilshire. It's very liquid, and it has very low fees. Now, what I would also recommend is going and adding it every year. So let's say you earmark, I save $4,000 a year for them. Each one gets $1,000. I would now reallocate that $1,000, and in the case of your eldest here, the 12-year-old who is going to get $4,000, I would take that $1,000 for him, and I would put $750 in the SPY and put $250 in Bitcoin. And it just because my belief in Bitcoin is going to be this monetary system for the globe in the future, I think it has a ton of upside potential. If you're not that aggressive, then clearly take that out, right? That is the apex of aggressiveness, but that's how I would do it if I had kids today, and I would actually be more aggressive and go more in the digital asset side. Oh, there you are, Adventures Family. I'm aggressive. I want a passive accumulation, but more over time. Then I would do SPY. I would do SPY. You have a lot of different choices here. And I guess Adventures in Family G, you could look out here on this list I have on my screen. So I know it's hard to read. Let me see if I can bump this up a little bit. These are all exchange-traded funds on the right-hand side. So you've got the diamonds as the Dow. You have IWM as the Russell 2000. That's small cap. You have IYR as real estate. QQQ, that is the NASDAQ 100. You have SPY, which is what I is representing as the market. But if you really felt strongly about different market sectors, you could split this into things like building materials or energy or financials, industrials, technology, utilities, healthcare, all consumer discretionary. All of these, are diversified baskets of stocks. And I think that the key here for you, especially since you have a very long time horizon, is you want to make sure you are diversified so you don't get caught holding one bad thing. And over time, if you buy SPY, well, let's go look at the S&P, for example. Here's SPY. Let's make it one step bigger. Obviously, now's a great buying opportunity. We've had a pretty big sell-off in the SPY. The question is, how much lower does it go? Does it go significantly lower? I don't know. Jeff, that's hilarious. That's good. Thank you. All the wives in the room are getting upset at you now. You're going to get some hate mail, Jeff. You look over time, and you have these major swings in the SPY. And just to kind of make it an easy example, let me go back to a weekly here to drive home this point. Take me a bit of time to preface it. And let's say you just made a rule to yourself that says, okay, every January 1st, I'm going to buy these allocations for my children, right? Whatever those allocations you decide to, whatever percentage deviations you have. For the past few years, this has been nothing but unbelievable, right? Obviously, if you bought and invested in 2022, you would have had a down year. You would have been down. It would have been a bad thing. But over time, you're going to be accumulating more at lower prices. So what happened here in 2023 is you accumulated at a lower price. Other than that, pretty much every month or every year, it just kind of keeps moving higher and higher and higher. Now, we will get a period of time where we're going to see a significant decline in these markets, right? A significant decline. And that's the key here is your dollar cost averaging, the ability to kind of add to it every year. And as this market goes up, great. But when it drops, you're going to be acquiring at lower prices and hopefully getting a greater rate of return. Now, one thing that does concern me a little bit is you notice here from 2020, from the lows in 2020 to our high we had in 2020, get that right on that click, to 2022, we had a 116% rally in 91 weeks. That's phenomenal. And then from the low here in 2022 to our peak just a couple weeks ago, another 76%. These are abnormal markets in my opinion. Markets don't generally run that strong. And I've shown this chart many times to my regulars here. But, you look back at this chart here, this is the dot-com bubble. And everyone just talks about the dot-com bubble like it's the biggest market crash in history. Well, it's not, right? On the S&P, I'll bring it right here. The S&P fell 51%. That's the dot-com crash, right? I'll put a yellow box around it so you can see that one more clearly. But there is your dot-com bubble, and that is viewed as one of the worst market crashes in history, other than the Great Depression. Oh, but wait. We've got our financial crisis here that started in October of 2007 and went all the way through March of 2009. Markets fell 57% in this second yellow box I'm going to draw for you. These also monumental market declines. And the problem I see here is what's happened to our market. When I zoom out, those market sell-offs that we had in 2000 and 2008 look insignificant compared to where we are today. And, at some point, we're probably going to get a major market correction. I don't know when that's going to be. It just kind of feels like it's got to happen because it's a normal tendency of markets. But, you might have the opportunity here to buy much lower, right, Todd? You could probably get much lower entry prices by waiting. And I'm in that camp, and we can maybe do a poll here of the viewers. We've got a lot of active traders in this channel right now. I am bearish for this year. I do think we're going to see the markets head lower this year. So, maybe you hold off for another couple of months before you start allocating, right? Exactly. Ferry says the higher you go, the higher the fall. And it's very true. The higher you're up, the more likely you're going to fall. And this almost feels like this insurmountable mountain we've been climbing. And it just keeps going and going and going. And this is on a standard chart. Let me see if I can adjust this to logarithmic. even on a logarithmic scale, which a lot of people say, got to use logarithmic. I mean, look at that. There's no way that anybody watching this right now could say, oh, this is normal. I mean, if you go back here to when the S&P started, which is with this chart goes all the way back to 1993. That's not normal, folks. This is very, very, very different. Can you tell me a reliable place to set those accounts up? Well, look, you can go to any big name brokerage firm if you want to do just a regular brokerage account. You may be able to do, I haven't set up a 529 account, so I have no experience there. But you might be able to do that right away. Let me see real quick here. I'm just curious if you can do it things like E-Trade. No, E-Trade is not part of Morgan Stanley. Does not offer 529 plans, but you can still, so you can go something like Morgan Stanley. Now, here's the catch. I'm going to assume here that when you go out and do a 529, which is a specific investment account for children, I'm going to go on a limb and say that when you go into a 529 account, you're probably going to be subject to the funds, to choose the funds that company gives you. So in this case, I just Googled it real quick. It says you can't do it through E-Trade, but you can do it as part of Morgan Stanley. Morgan Stanley will probably give you a bunch of mutual funds to choose from. That's the problem, right? When you go into mutual funds, you're paying a lot of fees. Now, you can get some mutual funds that will represent a similar market like the SPY, which is the big market, and you know that might be the way to go. So depending on which investment vehicle you choose, whether it's just a traditional investment account or a 529B or something else, there are different rules for each one of those, which I'm not privy to. I'm not an I'm not an investment advisor, but there would be some decent tax benefits to a 529, especially if you're using it for college. You can take that money out tax-free for college. I know that type of stuff. So, but yeah, the mutual funds will kill you. Mutual funds will kill you. You can do a custodial account for them too. Yeah, the question, John, becomes the tax exemption, right? The 529 becomes very attractive because that's designed for college, right? It's designed to pull money out there. So there's certainly some benefits to that one. But that's really a deeper question for a financial advisor. Let's see, JBG says, 529s offer choices of funds with different fees. I'm with you on Bitcoin for my grandchildren. Do you think Trump will let the market correct more, crash? Or I'll get to that in just a second. Yes, we give a range of funds. Your contribution should be tax deductible. Yeah, there you go. So just like a regular IRA, right? Not a Roth, but a regular IRA where your contributions are tax deductible today, but you pay the tax when you pull them out. So depending on how you set it up. I think there's even a Roth 529, if I'm not mistaken. So there you go. I hope that helped, Todd. Again, I'm one for simplicity, and again, it depends on your activity here. If you're a really active role and you really want to be managing it, then I think your investment choices should be different from what I was suggesting. Right now, if it's just, hey, let's just get them in the market and have this grow over time, then that's the way to go. Markets average a rate of return between 8 and 10% per year on average since 1950. The challenge is when we look at a chart like this, you know, you say, oh, yes, it averages 8 to 10% since 1950, but we also haven't had a major correction here. And I do think a correction is coming. How deep? I don't know. You know, if you look at the numbers here from back in the dot-com era where we fell 51% and then 57%, you know, what hypothetically would be your market price on SPY if we fell 50%? Well, that would bring you back, 50% would bring us right back down to around 2,800 on the S&P. Whew, man, that'd be brutal. 2,800 in the S&P. I mean, I'd love it. It'd be a buying opportunity. 2,800. I don't think we're going to get there. I mean, I guess I didn't see this coming, the dot-com era either. I didn't see the financial crisis going as low as it did. You know, these are black swan events. And what is the next black swan event? Who knows? There will be one. That's a certainty, but we won't know it until it actually transpires, unfortunately. We can hypothesize. Right now up to 35,000 in 5 years. Nice. What Lisa says. And unused 529 money can also be transferred to Roth accounts. Ooh, that is really nice, especially for your kids. Absolutely. Okay, let's go to Lisa's question here. Do you think the Trump will let the market correct more, crash, or stay down on his watch, or he doesn't care? I'll be honest, I don't think he really cares. And again, I know we have some people that love him, some people that hate him. I don't really think he's concerned too much about that. You know, I think he's trying to achieve things. And to achieve the things he's going to do, there's going to be volatility. There's going to be some pain. There's going to be a for long-term holding, why SPY as opposed to VOO with a ton less? VOO is not a ton less fees. Let's compare. Let's look at those up real quick. So he's got a good point. There are definitely other vehicles you could choose, but let's go to bar chart, and I think I can just go VOO. So VOO's fees, how low are they? 0.03. Okay, that's definitely lower. 0.03. SPY, I believe, is what? 0.19? 0.09. So, I mean, it's not a colossal difference, but you're right. You could use VOO. There are other ETFs out there. The SPY is the most liquid one. That's why I was saying it. But, you have plenty of liquidity here. The average daily volume for VOO is 8 million shares or 6 million shares average. So it's plenty liquid, and it achieves the same purpose. So you're paying a slightly less fee for the same basic instrument. So sure, you could use VOO. Absolutely. And that reason I was showing the SPY is, I mean, it is one of the cheaper ones. This is exceptionally cheap. I mean, it's almost like, why even bother managing this one? 0.03%. Chowsers. Okay, so hopefully I answered your question there, Todd. And again, thank you for that one. Typically, when you send in questions, I'll answer those on the show. And for all the others that send in questions as well, I typically answer them on the show. Yes. What is that? What is that icon, Jeff? Tesla getting, what is that, shot? Is that a gun? What is that icon there? Let's talk about Tesla for a second. Let's go bring up, because we're talking about yesterday. Let's go TSLA. It's not getting shot. It's looking good. So right now, as I mentioned, I sold the 210 puts on Tesla expiring this Friday, collected $650. So I'm totally happy with where we're at. I think you have to be more careful than ever now with Tesla, just because of the backlash. Again, you're creating this, or not but there's been this polarization now of extremism, and now you have some people that are vandalizing and destroying Teslas just because it's a Tesla, and then you have other people saying, well, I support him and I'm going to buy it. I do really think that you're going to get a lot of volatility going forward, which should be great for you and I, because that means the premium for these options on Tesla will continue to be very elevated. When I sold the 210s, I collected $650 for less than a week. I mean, that's 3% for out of the money stuff. That was pretty good. It's pretty good. Now, from a tech perspective, Tesla was up 7.59% today. You also had Nvidia, which I have the 115. I'm long from 115. I sold those puts, so we're back in the green on this one. 6.42%. I also have the 115 calls against my position, so we'll see what happens by Friday. But all in all, I'm feeling very confident. But tech, looking fairly good today, right? Amazon was up 1.17. You had Google up 1.82%. Meta was up 2.29. So a nice little rebound here for the pieces that were literally bringing this market down. They were crashing the market, and all of a sudden, that's bringing it back to the upside. So let's go through our top 10, and I'll wrap up for the day. Bitcoin, even though it shows a negative, it's pretty much unchanged on the day. Had a lot of volatility. We closed down 0.29% on Bitcoin. Futures right now at 83,155. Just waiting for this thing to get some legs underneath it. Just feels like it just can't seem to get started for Bitcoin. Moving up our list, it's all positive from here. Russell 2000's only up 0.13. Notice that at one point today, you see that long spiking tail today. We were up at one point on the Russell 2.67% at one point. I mean, it's great move up. And then didn't quite hold it, right? It's one thing to have gains, it's another to keep it. I think all of you understand that one. Dollar index up 0.16%. Still not looking that great. Had a pretty aggressive sell-off. We are past, we're actually right at the bottom end of this zone here that goes back to the November 5th low. So we've erased all those dollar gains since the election. Right now at 103.57, and we've talked about this thing potentially getting back down to 100 if it can break some of these current demand zones. S&P 500 looking pretty good, up 0.5%. I have drawn this graphic here, which I think I'm going to leave, which was the belief on my part that we would get a rally. I thought we'd actually see a move up here into that area of supply, which is right between 57.25 and 57.60. See a rally up there and then continue this sell-off, but we just did not seem to get that momentum today. We'll see if it transpires. Remember, tomorrow is the second worst day of the week, according to the year statistics. Your 10-year, a little bit of a pop-up in that 10-year off of that demand zone right around that 4.15 mark. We are right now sitting at 4.31 on the 10-year bond. Gold, 0.89% move to the upside. My guess is this will be challenging all-time highs here soon, and the discussion will now shift to CNBC and Fox and Bloomberg and all that, where they'll say, gold, 3,000? Yes. The question is not not if, but when. Gold will hit 3,000 here, given the more uncertainty, and certainly just because people talk about the 3,000 mark. We'll probably get there within the next couple months would be my guess. NASDAQ was your shining star from an index perspective. Even though it didn't hold all of its gains, it was having a great day today. I remember I turned around and looked at my positions like, right on, we're up over 2% on the NASDAQ, but finishing the day up just 1.13% for the NASDAQ on the session. And then the biggest gainer, at least from our top 8 that we look at here, crude oil, respecting that demand zone we talked about. It would not surprise me to see a little relief rally here for crude oil, but long term, still very bullish on crude oil charts going forward. All right, let me go into the last few comments here, and I'm going to wrap up. I didn't plan on doing an hour show, but here we are. Adventures, Family G, thanks for all of you. No problem. A friend of mine got scammed buying Bitcoin. Is Coinbase a good place to buy Bitcoin, though? Yeah, Coinbase is fine, and you should go with your guard up. Imagine in crypto, think everyone's a thief. If someone approaches you online and says, hey, buy here, buy there, don't. If you want to go number one, I would say Kraken is number one because the fees are much cheaper on Kraken, right? Kraken is an exchange. They're going to go public, I think, this year. They've been around a long time. But my order of preference in the U.S. would be Kraken number one, Coinbase number two. Binance has jumped back to number 3 because now they have, you can now use dollars. You can now connect to your bank accounts. And then number 4 would be Gemini just because it's very illiquid. But Coinbase is legit. One thing that you want to know, Family G, is if you keep your crypto on the exchange, it's not insured, it's not protected, that's a danger. So if you want to learn more about cryptocurrency, you could self-custody your cryptocurrency, meaning you would put that crypto in a location where you control the private keys, access to it, which adds another dimension of complexity to the digital asset space. So that makes it a bit more complicated. If you keep your SPY or your VOO on your Morgan Stanley or E-Trade account, that's all insured up to $250,000 per account. So you have insurance on one side, crypto does not. Gold is less than 2% away from 3,000. Well, I know, Big Ed. What are you saying? I'm not taking chances here? Yes, Owen. Coinbase is Coinbase, but there's a pro and a basic version. You should never use the basic version on any platform. If you open an account at Kraken or Coinbase or Binance, always use the advanced platform to buy your Bitcoin or crypto. Your fees will drop by like 80%. Much, much less fees. Okay, man, long-winded day today, especially for having a cold. All right, let's go to tomorrow's activity. We obviously have the consumer price index numbers today. Here's the PPI, producer price index numbers coming out. And again, we talked about that already. Really surprised to see the expectations dropping. 0.4%. Now they're expecting it to be 0.3. So a little bit of a drop here in that producer price index. And of course, that does fall in line with what we had happen today. The consumer price index number was actually rather surprising, at least for me, dropping from 0.5 to 0.2. That's a huge miss on expectations there for the better from an economy perspective. So inflation is certainly slowing down significantly on consumer price index. Let's see if we get that same sort of number coming out from PPI, which is producer price index, tomorrow. And that'll be 1 hour before the markets open. And of course, for those of you who are trading natural gas, you have a natural gas announcement 1 hour into the trading day. I'll just bring up UNG here. Natural gas has been on a phenomenal run ever since I got out. It's been ripping. I got out right here. Literally the day before the end of the year, I got out at like $19 and it's already up to 21. It's hit 24. Son of a biscuit. Amazing. Can also just buy IBIT if you don't want to mess around with direct. Yeah, totally. 100%, John. So for Todd G, if you wanted to, you don't have to buy Bitcoin and do self-custody. That's very complicated and could be confusing. You could buy IBIT. Now, IBIT does have I think it's 0.19% fee or it's a 0.25% fee. So the fee's a little bit higher there, but IBIT would be the way to go if you want to keep it in an equity-based product, an ETF. Good point there, John. Echinacea tea, coneflower. Coneflower? We're talking coneflower. I never heard of coneflower. All right, I'll check it out. All right, that's going to do it for me, everybody. Do I have earnings tomorrow? I think we do. Let me check. There wasn't earnings for tomorrow. Actually, there was earnings for today, but let me go to tomorrow's list here. Yeah, you got Ulta Beauty, Dollar General, you got DocuSign. Those are some of your bigger names for tomorrow. And then today, we had Adobe. Adobe beat earnings and down 4% on the day, and that was pretty much it from the U.S. perspective. A couple other ones, but actually there's one in iRobot, IRBT. If you guys saw that one, IRBT was saying it because of the tariffs. They may cease to exist and go out of business. Like, well, that's a pretty big statement. They were down 35% today. Don't try to catch that falling knife, folks. I don't know if I would, jump out there and try to do that. It was $6 yesterday, and now it's trading at $3.90 in the after-hours session, going lower and lower and lower. If anything, maybe this gets bought by a competitor like Tesla, like Amazon, and getting more into that robotic space. But yeah, I thought this was pretty big news. Anyway, that's going to do it for me. Hope you guys enjoyed it. Todd, thank you for the question. Hope you got some answers that will help you out a little bit, at least in that direction, and helping you and your 4 children. So thank you for that one. And all of you sent in questions and participated today, thank you so much. Email me if you have any other questions, tradermerlin@gmail.com. I'm going to go have some hot tea and lay down in bed. I'll see you guys tomorrow. Take care.